Recently, Bloomberg reported that China sold a record amount of US Treasury and agency bonds in the first quarter. China is moving to diversify away from American assets as trade tensions persist and to stockpile the gold. According to US Treasury data cited by Bloomberg, Beijing sold $53.3 billion worth of US Treasury and agency bonds from its stockpile. Belgium, often seen as a custodian of China's holdings, disposed of $22 billion of treasuries during the period. That dropped its total holdings to $775 billion. Even though US Treasury Secretary Janet Yellen brought up the matter with her Chinese colleagues during an official visit to Beijing, Alicia Garcia Herrero, head economist for Asia Pacific at Natixis, stated that additional sell-offs are conceivable. "I think the minute," she said, that the US wouldn't take anything off the table in response to China's overcapacity, Beijing wanted to give a signal that they were serious about dumping US treasuries. She said, "Before I proceed, I encourage you to consider liking the video and don't forget to share your views on the topic in the comment section below. Your feedback is invaluable for us and a wider audience around the world." Here the question is, who will keep funding the federal government's borrowing spree? China still ranks as the second largest foreign holder of US debt with total holdings of $775 billion, but the UK with holdings of $700.8 billion in US treasuries could soon overtake China. Japan ranks as the biggest foreign US creditor with $1.17 trillion in treasuries. China has been divesting itself of US debt for several years. The country's treasury holdings have fallen to their current level of $775 billion within 3 years from around $1.1 trillion in 2021. Altogether, one estimate has calculated that the country has sold more than $300 billion of US treasuries from 2021 to 2024 first quarter. Stephen Chu, Chief Asia Foreign Exchange and Rates Strategist at Bloomberg Intelligence, said that China is selling both US Treasury and agency bonds. Even though we are closer to a Fed rate cut cycle, there should be a clear intention of diversifying away from the US dollar holdings. He added, China's selling of US securities could speed up as US-China trade war resumes, especially if Trump returns as president. Renmin University finance professor Zhao Shijun told the South China Morning Post that the sell-off will likely continue. He said China's overseas investment has been concentrated on US treasuries in the past, but there is space for the Chinese government to further cut back its holdings in the future. China is intentionally minimizing its exposure to the dollar. Chinese policymakers have observed how the United States weaponized the dollar against Russia. How did Janet Yellen float the idea of seizing Russia's frozen dollar-dominated assets and giving them to Ukraine? The Chinese are watching everything. They realize the US could use the dollar against China during the conflict, and they are not dumb. China seems to be accelerating de-dollarization as trade relations seem unlikely to improve between Beijing and the US anytime soon. Most recently, the Biden administration has announced on a slew of advanced Chinese products, targeting everything from electric vehicles to batteries. Even if former President Donald Trump wins the White House in November, he has promised to apply tariffs as high as 60% on Chinese imports. China is also de-dollarizing its reserves as part of a broader movement to diversify global finance. Beijing is also diving harder into purchasing gold to diversify from the dollar. Now the metal makes up 4.9% of Chinese reserves, the highest since 2015. It's a trend followed by other central banks who have also been snapping up bullion at record speeds. After witnessing how the West applied dollar restrictions on Russia in 2022, fear the US sanctions first triggered this pattern among central banks. China, Russia, and other countries with close ties with them have increased their holdings of gold in foreign exchange reserves since 2015 and using local currencies for international payment, while countries in the US bloc have kept them broadly stable. Geeta Gopinath, first Deputy Managing Director of the International Monetary Fund, said this suggests that gold purchases by some central banks may have been driven by concerns about sanctions risk. Chinese are stockpiling gold, a reserve asset with no counterparty risk. The People's Bank of China has added gold to its reserves for 16 straight months, adding over 300 tons of gold to its stash since it resumed reporting gold purchases in October 2022. However, China may hold far more gold than it officially reports, as Jim Rickards pointed out on Mrs. Daily back in 2015. Many analysts believe that China keeps several thousand tons of gold off the books in a separate entity called the State Administration for Foreign Exchange. Here the question is how big problem this is for the US Treasury and the United States. Of course, dumping US Treasuries by China and other countries will create a big gap in the US Treasury as the federal government runs massive deficits month after month. Foreign investors make up about 1/3 of the market for US Treasuries. You could say that there is still plenty of capacity in the domestic market, but the problem is the largest domestic US bond holder, Fed, is also out of the market. The truth is, Fed holds more US bonds than others. As of the end of 2022, the Fed owned 35% of all domestically held treasuries. Fed treasury holdings totaled over $3 trillion US. The Fed generally holds agency bonds and keeps its big fat thumb on bond market. By buying and holding US bonds, the central bank creates artificial demand, driving prices higher than they otherwise would be and keeping yields lower. This allows the US government to borrow more at lower interest rates than it otherwise could. The actual problem is the Fed is out of the market right now and wants to allow treasuries to roll off its balance sheet with a tightening policy to push down price inflation. However, if the biggest player in the domestic treasury market, Fed, and the second largest player in the foreign treasury market, China, are selling bonds, then who is going to absorb them all, along with the new debt issued by the US Treasury every month? This is one of the reasons Treasury yields continue to climb despite hopes of a Federal Reserve rate cut. And that's a big problem given that the US government has shelled out $522.02 billion US on interest payments just halfway through fiscal 2024. That's a 35.9% increase over the same period in 2023. The only category with higher spending was Social Security. If the Fed will consider to jump back into the treasury market, it will end up inflationary for the United States. Thank you for watching, and don't forget to subscribe to our channel for new videos on important international topics.